Thirdly, as mentioned, dark pools are less regulated than public exchanges, which might sound like a benefit to nefarious traders and, say, short sellers looking to obscure their information. But in the past, it's actually meant that traders in the dark pool have actually been abused by dark pool operators, with us seeing examples of dark pools misleading institutional investors on how trades were priced and fulfilled, blatantly sharing or trading on supposedly confidential customer order information, and failing to protect their investors from predatory traders, even at times giving these traders special access to their platforms or order types. So we've seen a lot of companies charged and fined for effectively abusing their clientele. And those are only really the issues faced by participants in dark pools. As mentioned, there are also a lot of public criticisms of how dark pools sit in the larger ecosystem of the stock market. With the first main one being that with dark pools only being available to institutional investors, it does inherently feel like an unfair advantage given that retail investors don't have access to these same markets. I know it is worth highlighting that the average retail investor or even trader probably wouldn't see much of a benefit to using dark pool trading. They don't face the risk of moving the market and really being targeted the same way as, say, a market maker by high frequency traders. But regardless, when there's a tool in the market that one party gets and the other doesn't, that's going to be perceived as unfair and an issue, especially given that many would argue that large buys and sells should move the price of the market against the large buyers or sellers, given that that's relevant information.